Okay, what's up, people? Welcome back to another stream. Hope everyone is doing well. As always, guys, if you're enjoying the content, please be sure to drop a like, subscribe to the channel, hit the bell so you don't miss out on any streams or uploads in the future. All that is much appreciated. But of course, we've got a bunch of markets to get through today. It is, it's the first stream of the year as well. So we'll see what the tone is for Jan, what the focus is, what's on my watch list, what I'm focusing on. Of course, if you guys do have any recommendations, any markets you're looking at, feel free to stick it in the chat, and of course we can discuss and see what is happening. But I am currently looking at four markets which look interesting. I'm trading two of them. Pretty much the same move. What's up, replay? Welcome to the stream. Hope you're doing good. Pretty much the same move because I'm looking at Aussie strength mostly, but also a bit of Euro weakness coming into play. So we'll go through both of those markets as well. And of course, we'll go through a bunch of generally USD, yen, some of the metals indices, what is going on across the board. Now, firstly, we'll start with Euro Aussie. So I actually currently am short on Euro Aussie. My position I took at the beginning of the year. So I actually took it on this candle here, which was technically on the first trading day of the year, with some shorts here. Price has been giving us a lot of signs that we're not able to remain balanced in this area. We're seeing consistent lower lows and lower highs. The market is struggling to maintain support. We're still searching lower for stronger areas where buyers can come into play and actually provide equilibrium between sellers and buyers, but we're not seeing that participation. So with that said, you'd expect price to head lower to go and find some areas where buyers do actually have a bit of a say. And that first area would actually be this low here, but I do expect a lot more downside. Reason being, if you look at the higher time frames, we had this really big expansive move early in 2025. And basically what's happened is the market's found balance here, has expanded higher, but now it's failing to hold balance here. So I would expect price to now roll back to this zone to go and restore that balance. So I'm expecting a big rollover there for Euro Aussie back towards value, back towards 1.68 to 1.64. So that's kind of where I'm looking to target for the trade. I'm not necessarily having a specific price where I'll get out. I'll kind of monitor as we go along. But essentially, we're failing to maintain this 1.8 region. We've seen price try to stabilize there. It's failing. We're consistently breaking through lows, maintaining lower highs. This for me is the next value area for Euro Aussie. So currently short. It looks like price is starting to spill over. I'm expecting some strength on the Aussie. I'm expecting some weakness on the Euro as well. Pretty much everyone's been long Euro for most of 2025. So I'm expecting a lot of crowding on Euro as well. And naturally, a little bit of scaling out of those Euro longs as the Euro narrative starts to diminish. People start to exit their long positions in Euro, and potentially that could give a bit of relief to the market as well. So Euro Aussie, I like to the downside, and also I did jump into Aussie CHF to the upside. Again, very, very similar trade. I'm still kind of long on Euro. Again, I entered the trade at a similar time, which was on this candle here, and stop losses was underneath this low here. So I went into a bit of drawdown initially, but momentum's picked up. And again, it's pretty much the same analysis as well. You can see price basically failing to maintain this area. And again, we had a very expansive drop lower. That's critical. Price was having a lot of equilibrium. If we go to the weekly chart, price was having a lot of equilibrium and just two-sided participation in this area. We had a massive drop, and now price is again finding consolidation, finding balance here, but just can't sustain it. We're seeing higher lows starting to creep into the market, and then I'm expecting price to drift back towards value. So that's the trade I'm looking to take, which again is pretty much copy and paste of Euro Aussie, to be honest, except here I'm looking at CHF against the Aussie rather than Euro. I do think Euro Aussie is the better trade because Euro Aussie with Aussie CHF, we do have that kind of notorious downtrend, and if things do escalate, CHF, of course, there's always that safe haven currency. So this could turn around if things escalate globally, but I like how everything's positioned up and how price is moving. We can take a look at Aussie yen, no problem. Those are the two markets where I'm currently involved. I am looking at pound Aussie, but I probably won't take any positions just because it's pretty much the same trade as Euro Aussie. And I do think Euro Aussie is a better position in terms of the market structure. Pound Aussie has already seen some downside. Euro Aussie hasn't seen much downside. It's starting to see some downside now, but hasn't seen much. So pound Aussie has already traveled some distance. Euro Aussie hasn't. And also euro is a bit more crowded to the upside than pound as well. So if this does unfold, euro Aussie should give us a more meaningful expansion lower. So better risk reward opportunity than pound Aussie as well, but essentially the same trade. And then EuroCAD, something I'm watching currently as well. Very, very tired uptrend. We've gone very, very flat. So this uptrend looks like it's really tired. And I'm looking for us to roll over, but it's still quite flat. I'm still kind of waiting for a bit more evidence before I click the trigger. But I am looking at some shorts here for EuroCAD. We're very overextended. Market looks tired. We're failing to see higher highs now. That's a bit of a red flag there for the buyers. So again, expecting a rollover, just not quite ripe yet for a short. What's up, Natural Therapy? Welcome to the stream. Hope you're well. I'm doing good. Thanks for asking. Hope you are doing good as well. We'll go through Aussie yen next. Of course, any recommendations, stick them in the chat, and I'll be happy to go through. And if you are enjoying the content, please be sure to drop a like and subscribe. Does help out, of course. So Aussie yen still relatively healthy. We got a lovely uptrend here. Yen is still predominantly quite weak across the board. Aussie has been pretty strong as well. We've seen that. So I wouldn't be looking to do anything in terms of the short side of things for Aussie yen. That could be coming into play maybe later down the road in 2026. But as of right now, there's no signs of that happening. We do have some major structural highs here, which price could be looking to drift towards maybe before we do have a bigger correction. So keep that in mind. We've of course broken through these highs as well. So there is a lot of intent with this bullish move. But everything does look moderately healthy. Yes, we're starting to slow down, but higher highs and higher lows have been very consistent, as we can see here. And looks like the market is just taking out these highs and still pushing. I would anticipate another bit of a pullback at some stage, but until we start to threaten structure, or we see numerous lower highs start to develop, or maybe the market starts to consolidate, that's when something different has happened structurally. At the moment, the market is still creating higher highs and higher lows. So the trend is still very much at play. But of course, we're in that bullish phase of the trend. So we'd expect a correction at some point. Now, I wouldn't necessarily say I would expect a correction in terms of, okay, I'm looking to short Aussie yen because I'm expecting a correction. It's more so I would expect to pull back, but the opportunity is buying the dip, not necessarily selling the pullback. Because again, we don't necessarily have to. Price could expand higher if it wants to. We're not necessarily in the predicting business, more so just making calculated judgments of the market. So yeah, Aussie yen still very healthy. It depends what time scale you're looking at. If you're very, very intraday, you might be able to catch some short-term buys because the market's been very consistent with these dips here on the lower time frames. So you might catch a short-term buy back into the highs again, but the emphasis is on short-term. If you're looking for something a bit more meaningful, a bit of a swing position, we need that swing down first. But yeah, the trend is still healthy across the board, and a lot of the yen pairs are still showing the same evidence, really. Yes, we could take a look at Aussie, New Zealand dollar as well. No problemo. Happy to take a look. Natural Therapy, that's good to hear. I'm also good trading as lonely. Of course, man, it is a lonely business. Yeah, I mean, again, with that situation as well, with trading being lonely as well, is that if you're not careful, if you're not aware of that situation, that loneliness could lead to more activity in the market as well, which could hinder your performance. My biggest advice with trading is always to have something else apart from trading that you're working on, or that is a major commitment in your life. Because if trading just becomes everything, which is not necessarily a bad thing, it just means you have to be very, very disciplined. It's a bit easier when trading is something you're working on, but you're also working on something else, or there's another major commitment, which is not lonely. Then that provides a bit of a relief element. So you're trading in the morning and then maybe afternoon, you got something else to dive into. But yeah, absolutely, you're not wrong there. Okay, let's go through Aussie New Zealand dollar. So yeah, still looking very bullish. It looks like we're seeing price expand higher and break out of the multi-year range, which is quite significant, because you can see here since what 2014 to present day, price has essentially been ranging. But we are hinting at potentially a breakout because our last month's candle in December closed very well above prior highs. I would say the only way I would look to reinvestigate this is maybe if we see Jan Feb start to close aggressively back down again. If not, momentum is starting to bleed to the upside. We've been pretty consistent with these higher lows as well. So it is hinting that price is building up momentum. And now that we're breaking through highs, this could be the sign of a big expansion higher. So I would just say if you're looking at more lower time frame, buying the pullbacks makes the most sense until we see some evidence that price is trying to break structure. Because if we see a move like this on the daily, then okay, the breakout on the monthly chart probably isn't actually happening anymore. And we'll probably look at something like this and a bigger move down. But if this trend does persist and we see healthy pullbacks, which so far is happening, then yeah, we could actually be looking at a very legit breakout on higher time frames. And at the moment, that is the case. So again, would I be looking to buy Aussie New Zealand dollar now? No, just because we made a new high here. It's not the effective place where I want to buy. Yeah, I want to be looking for pullbacks and dips. So something like this would be a nice opportunity, especially as a swing trade. So yeah, at the moment, we're hinting at breakout. Trend is still healthy, momentum's still there. That is the current direction the market is showing us. Let's see if that persists. So we're looking for pullbacks and we're looking for continuation. Is this the right moment to be jumping into some buys? It depends on your situation. If you're looking for a trade where you want to hold for a few days and you want to ride the trend, no, you would want to wait for a pullback. You don't want to be trying to buy at highs. That's not the best place, especially in an FX market. If you're buying Bitcoin or something in a bull cycle or gold in a bull cycle, that's different. FX doesn't move like that. You always want to be buying dips if you're looking at trend continuation. Buying at highs means you're only looking for a short-term move, which is fine if that's your time horizon. If you're looking for a pullback into structure here and then you're looking to hold it maybe for a day, okay, that makes sense, but you need to be looking to exit that trade or at least taking most of your profits and maybe trading some stops if you want to see how far it goes, because you're not positioned well for a big trade here. Doesn't mean one can't happen, but it just means you're not really positioned well for that type of move. So it depends what you're after for Aussie New Zealand dollar. In terms of the direction, you want to be looking to buy. If you're looking for that bigger swing trade, a bigger correction would be nice. If we could test some structure here, that would be nice. If you're looking for that short-term trade for the day, potentially, you got a zone here, nice consolidation, which did have a pretty expansive move higher. We could see a healthy retest back to highs, but I would call it a day pretty quickly with that position. So yeah, hopefully that made sense on the Aussie New Zealand dollar. Lorraine, what's up? Good afternoon. Happy New Year to you as well. Hope you are doing good. Welcome back to the stream. Hope you had a good New Year's. Hope everyone had a good New Year's and is ready for the year ahead, rested, recharged. What's up, CS? Hope you're doing good. Welcome to the stream, my man. I hope you're doing well. We'll go through some USD markets. Been some interesting moves on them. Well, not really, actually. They've been quite dry. We can take a look at No Problem Natural Therapy. Happy to help. Thanks for the advice. Good luck with your session. I need to go. Okay, take care, man. Have a good day. Yeah, so DXY, a little bit flat recently. I mean, to be honest, it's been flat for quite a while. I say recently, it's been flat arguably since we had this last big drop in April. Price hasn't really done anything for a while. So we are a little bit flat, a little bit stagnant here. And the question is, okay, price is consolidating to do what? Expand higher, expand lower. At the moment, I wouldn't say there's an obvious answer to that. I would say the market is pretty flat both ways. We've got equal highs over here being respected pretty well, and we've got equal lows being respected pretty well. So it's a pretty kind of symmetrical textbook range, actually, which is not always the case. Sometimes ranges are a little bit messy. They're not always quite symmetrical, but this is pretty much picture perfect. At the moment, of course, we're coming off the respect of the prior high, and now we're kind of floating in the middle. So categorically, this is the worst place to get involved, because this is where indecision is at its highest. This is where consistency is at its lowest as well. So there's no real obligation for price to swing back to these lows or swing back to the high there, or at least from a trading perspective. So trying to look for anything meaningful in the dollar, I think is always going to be a bit difficult at this time. And what I mean by meaningful is like a swing over like the course of a week. If you're looking for intraday trades, that's different. You're looking to be in and out, take advantage of that session or that particular day. I can understand that. But if you're looking for any kind of swing trade, this is where you're kind of more guessing rather than taking good evidence to support a bias. So really with the DXY, I'm kind of just letting things go in terms of my bias. I mean, I would naturally be bearish because we've just respected the high. So I would expect to push to the low. If the range symmetry is going to continue, then you would expect to push to the low. So that's naturally the bias I would have. But would I look to trade that? No, not really. So with the DXY, from a personal perspective, I'm just letting price do its thing and seeing how we shape up over the first kind of maybe month or two of the year here. I think other markets look a little bit more attractive to trade. So DXY, just kind of seeing what we do here, because if we don't see a push to the low here, that is a piece of information to take, because it means that, okay, we are seeing test of the low, the high, the range, but suddenly now we're not making that journey anymore, especially if price makes a move back to resistance. That will show us that, okay, buys are starting to be a little bit stronger. Sellers don't quite have enough weight to actually push us all the way to the opposite level of the range. And that would start to indicate that buyers are performing a little bit better, and we could be getting ready for a move higher. But of course, that could take maybe a couple of months for us to really understand if that's the case, or if price is just going to have a weird consolidation right now before drifting lower. So it's really just waiting and seeing what price will provide. Looking at some other USD pairs, pound USD again coming into a larger range. Am I entirely attracted to trade pound USD right now? No, not really. I do think pound is gearing up for a bigger move higher. Just looking at the weekly chart and how things are shaping up, this trend looks like it's picking up some momentum. But after all, we are still well within this range. So I'm not really incentivized to be looking to buy or sell anything right now for pound USD. Again, there might be some short-term dips to buy as we maintain this bull trend here, bull cycle. But now we're trading in the most noisiest section of the range. Again, is it the best time to be sticking positions on? In my opinion, absolutely not. So pound USD, I don't see much of an opportunity. Again, if you guys do want me to drop a bit more lower time frame, let me know. I'm just looking for mostly a swing perspective, a swing trading point of view. In terms of Aussie dollar, this one has been continuously pushing higher, but again, super corrective. It's not like this trend is like very healthy. It's very fatigued, always having very kind of violent and deep pullbacks to continue the trend. So it's a very tired market, but it's still creating higher highs. So it's still just about doing its job. But do I want to be looking to buy here? Again, probably not. Last time price took out highs, we had a major pullback. Could I expect something similar? I could expect something similar. So I wouldn't be looking to try and buy the breakouts here, because we're in that area where a pullback, a deeper pullback makes sense. So it's kind of 50-50 at this situation. So again, I don't see much opportunity there for Aussie dollar. Dollar CHF is stuck in a bit of a range for this one. Again, we've got more or less equal lows down here. Not really equal highs up here. I mean, that's kind of like the last major high I would draw. You can see we haven't really been quite making the moves to go and test that area. So I'm keeping a close eye on dollar CHF. It's very flat. There is a slight downside slope to it. Of course, we do have that prior bearish trend hinting at that bearish move as well. So if we do keep up these lower highs, so we do keep pushing up another lower high, well, eventually I would expect this just to collapse and break lower. So there could be some nice shorts coming up soon for dollar CHF. Not currently because we're still respecting support pretty well. But if those lower highs do persist, there's only naturally one way prices like to go unless something eventful in the market, it's a big fundamental announcement, release shock, whatever. Of course, that could change things. But from a price action perspective, if we maintain those lower highs, naturally there's only one way price would probably look to relieve that stress, which is lower, which is continuing that whole bearish move that we've been seeing since 2022. Nothing's really changed there. So yeah, dollar CHF still on the decline, but in a range. Don't see much of an opportunity just yet, but I would say one to keep an eye on, especially the first maybe quarter of the year. That could eventually leak to the downside. In terms of Euro USD, this one's slowing down quite a lot now. You've got the prior high. If you take this into account here, you can see price came back to retest it. No sufficient price action to break through or create new highs. Worrying signs if you are a buyer. So would I be looking to sell Euro? No. We still do have some meaningful structure below, which could potentially rescue the buyers and see another swing higher. Do I want to be buying the market? No, as well, because I'm seeing price really struggle to break the highs there. If we were breaking the highs, that's different, but of course we're not. So we're stuck between a rock and a hard place. Buyers are failing to perform, but sellers still got a lot of obstacles against them if they really want to see some meaningful downside. So with Euro, again, waiting for more information before I do make a judgment. Again, focusing on quality over quantity. When markets do provide opportunity with quality, with evidence, you want to be all over that. When the opportunities are just a little bit gray, you're not too sure, you can see legitimate moves in either direction. If that's the situation, you don't want to be forcing any trades. Even if you do force trades, you won't be confident to see them through as well. So Euro dollar being very, very stubborn. I'm just going to let the market do its thing. Yeah, I don't see much opportunity. And then New Zealand dollar, interestingly enough, is a market that does have some downside opportunity if the trend does persist. You can see here mostly lower highs being very consistent. Now we've had this bullish move and price is kind of testing the extremes of this trend. It's basically saying, okay, we've had this bullish move, taking out some minor structure here. Is this price getting ready for a turnaround, or is price just testing the upper limits of this trend and it wants to eventually roll over? I would say if we can get a significant break to the downside like that, that would tell us that, okay, this was just a pullback. We've just placed another lower high. And now the odds of price coming back to this low is then pretty high. So New Zealand dollar, out of all the USD pairs, I can see some opportunity that makes sense. It's not quite here yet because we could still do something like this and trend higher. So it's quite pivotal that we do break lower with some force. But there's some opportunity there potentially for New Zealand dollar. Not quite here yet. So keeping an eye. Replay market's very slow. Yeah, I would agree. Markets are pretty slow, especially in the USD side of things. Not really seeing any progress, any funds. And again, that's one of the key lessons which I was trying to refer to in the 2026 challenge video I made going into the year, which was, reducing your trade frequency. Because, if you're trading, if you're always trading, that means you're always reacting to information. And a lot of the information provided from the markets, unfortunately, is just random noise between buyers and sellers. So you don't want to be so reactive. And if the markets are slow, not really showing any favorable move to a particular direction, and that's absolutely the right time to be sitting on your hands. And that itself is a skill, and that itself is part of your edge as well. A lot of people think that just trading and the patterns you're trading, the strategy you're trading is purely your edge, which is actually false. Not trading as well is actually part of your edge as well. And I say that because if you're always taking very substandard trades, very poor trades, then your expectancy is going to be either zero or negative. And most likely, if it's zero, it's going to be negative anyway because of the cost of the trading, fees, commissions, spreads, etc., slippage too. So because if you take poor trades, your expectancy is zero. That means not taking a trade. Well, if you don't take a trade, your expectancy is zero. So it's better than negative. So essentially, you not trading is actually a better outcome than other people trading but taking poor trades. So having that constraint to say, okay, yeah, this opportunity is not quite there. The market's a bit slow. I'm not really seeing any evidence to support any narrative. Then actually sitting on my hands is actually the more profitable thing to do. And then when times are ripe, that's the time you look to strike. That's the time you look to, put your capital at risk because it makes sense to. And I think a big part of that is just reducing your trade frequency, being more selective, which again is difficult, but I think is absolutely necessary if you want to achieve your goals. Replay, how much time should we watch the market? Good question. That's actually a very good question because it doesn't really matter how good of a trader you are. If you spend too much time, eventually you see yourself become the villain and start taking some poor trades. So I would say it depends on what type of trader you are. For me, for example, I would look at the markets for about 30 minutes in the morning. And if anything is developing that day, I would know in the morning because, again, how I derive my bias is on the daily, weekly chart. So it's not like I wake up one morning and then suddenly there's a trade in Euro USD. I know about this trade forming at least, 2-3 weeks in advance. So when I wake up in the morning, it's just to check, okay, has this opportunity actually started to materialize now, actually starting to present an opportunity to take a trade? So that's really what I'm checking in the morning, which takes less than 30 minutes, really. And then, of course, if there's an opportunity, I will look to place a trade. If there's no opportunity, then that's the chart's done for the day until the next morning. So really, you want to confine your trading to, I would say, an hour or less per day. If you can do that, I think that will really change your game. And of course, that will feel a bit uncomfortable because it feels like you're missing out on a huge part of trading the day. You're missing out on a lot of information. But if you restrict yourself to like an hour on the charts a day, even if you're intraday, I would say maybe an hour and a half. So like I would say maybe half an hour analysis in the morning, and then give yourself a 1 hour window to actually place trades and manage trades. And of course, you can maybe exit trades later in the day if you need to, or close a trade because of news or whatever. But in terms of like actively looking for a position because something's presenting itself, I'll give yourself an hour window. So 30 minutes in the morning to analyze and about an hour to actually trade. And of course, the higher the time frame, the less time you need as well. So I would say limit yourself to about 90 minutes a day. Again, a little bit uncomfortable, especially if you're spending 3, 4, 5 hours a day. But again, with trading, everyone says less is more, but less is very, very much more because the opportunities in trading are not actually that great. Majority of the time, 90% of the time, the opportunities that the market presents is not actually a good opportunity. It's just noise expressed. So actual really good opportunities are rare. Therefore, you need to be trading rare. Therefore, you need to be on the markets less. Because if you're always in the markets, you're going to take a bunch of poor trades. You probably take the good ones as well, but you take a bunch of poor trades, which will erode the profits you make on your good trades. So limiting your window to a very small part of the day means that you can be very precise. It means the room for error is very, you don't have enough opportunity to go and start taking some rubbish trades later in the day because you're bored. So I would experiment. I wouldn't say there's one particular window that's the best. It depends on the market you're trading, depends on the sessions you're trading, depends on how long you look to hold your positions as well. So a lot can come into play, but again, you've got the freedom to experiment. So I would say lock in 90 minutes. And then maybe if you need to add half an hour, you can add half an hour, or you can subtract half an hour later on. But 90 minutes is a good starting point. And if you're a bit more swing, I would say lock in 30. Challenge yourself. Challenge yourself to have a small window. Everyone wants to be trading all the time. Everyone wants to be on the markets all the time. Try and do the opposite. If the crowd wants to be trading all the time, finding opportunities all the time, taking positions all the time, why not do the opposite? If the crowd is majority losing, then why not do the opposite? Limit yourself to a small period of the day and then do your work there. If nothing presents, you come back again tomorrow. And I think that will make you less stressful, make you more precise. In terms of your workload, it would diminish. In terms of your accuracy, it will go up. I think just it will have a big benefit in your trading altogether. So yeah, experiment with that. But it's a very good question. I'll probably do like a video on that topic in general, just like time spent in the markets as well. If you're back testing, that's different. If you're in the learning phase, of course, you want to be exposed to experience. You want to be taking trades as much as possible, really, actually, because that's your learning. But once you actually do have a solid enough foundation where you kind of know what you're looking for, not that you've got the best strategy or you know exactly what you're doing, but to a healthy degree where you can explain it to a stranger what you're looking for, what you're doing, then at that point I would say reduce your hours. In terms of live markets, of course, you can still back test on weekends and spend hours there, of course. But in terms of live market experience, you then want to reduce that. Anymore, you kind of just trading noise, really. So yeah, experiment with that. Anyway, we'll go through some of the yen pairs. We went through the USD pairs. I'll go through the yen, and then I'll take a look at some of the crypto and the indices as well, because they're looking a little bit interesting today. BTC is down a little bit, I believe, today. Yeah, BTC down, Ethereum as well. Although they have seen some nice upside over the past few days as well. So we'll look into that as well. But first, we'll go through the yen. So yen, of course, had a really aggressive end to 2025 and have been super, super bullish. So the plan is, okay, are we still looking to follow this trend? Or is it time to start to be careful and maybe anticipate a reversal? I would say it's a bit of both, because the trend is still relatively healthy for most yen pairs. We'll go through them. There's no significant signs of market structure that was starting to degrade or lose efficiency to the upside. Higher highs are still very persistent. The only situation is that this trend will be going on for ages, so naturally it will be coming to an end soon. But of course, when that is, we don't know. It could be mid 2026. It could be towards the end of 2026. So you want to trade what's in front of you, which is still a very healthy trend. So as of right now, Euro yen pulling back into some healthy structure here. Prior demand zone gave us our last push to the upside. Pullback has been nice and corrective. This is really a healthy sign of a market still likely to continue higher. If, of course, things change and we start breaking structure, we will analyze that as well. But of course, that's not the case just yet. Aussie yen, as we spoke about as well, still looking relatively healthy. We have created some highs here, so I would expect a pullback for Aussie yen pretty soon, but market's still showing upside. CAD yen, this one had a bit of a consolidation and it's breaking lower, but again, the consolidation is not of crazy significance. It's not of trend defining significance until, of course, we start to show some structural breaks. As of right now, we're pulling back into areas where buyers can come back in and continue this trend higher as well. So CAD yen looking healthy. New Zealand yen looking healthy as well. Higher highs and higher lows. I would say New Zealand yen is probably one of the more awkward yen currency pairs, because it's not a textbook range, like if you textbook trend. Sorry, if you compare to CAD yen, relatively healthy trend, relatively consistent. Aussie yen, really consistent trend, really healthy. Euro yen, pretty consistent as well, really healthy. New Zealand yen's kind of like a weird consolidation that's finally kind of broken out and now is really looking a little bit fatigued. So I wouldn't treat New Zealand yen how I would treat CAD yen or Aussie yen or Euro yen. Those are healthy trends. Those deserve, buying the dip sort of situation. New Zealand yen, yeah, still will probably perform similar because it is a yen pair, but structurally it's a bit different. Pound yen, very consistent as well, looking really, really healthy. We've got some structure here, would be nice to pull back into. If you look a little bit more intraday, Yeah, it looks like prices had an attempt to break higher, but hasn't performed too well here. So you can see that's our prior highs, it's our prior lows. We had the breakout and our price is back within the range there. So we'll see how that does continue, because there are some slight signs that buyers are still in control, at least within this area here. Because if you look at the lows, they are slightly higher than the previous one. So if that does continue again, let's say if we form a high low here and we break back above, well, I would expect us to expand higher there. If that doesn't continue, and let's say price respects the high of the range and falls over, then of course we've just got a range again, everything's neutral. We'll see what happens from there. But yeah, if we do break back above, if this is just like a deep pullback, there's still upside there for pound yen, especially on the retest of that structure. So that could be something to keep an eye, especially intraday. And then Swiss yen is still looking very healthy as well, pulling back. We've got some structure just beneath us, healthy place for a buy. So yeah, yen pairs still healthy, predominantly still looking for longs. No real signs that structure's over just yet. So I wouldn't do anything in terms of the shorting side of things. Only pullbacks make sense. Mr. Nub, is that Mr. Nub? What's up? Hope you're doing good. Can I reach profitability in Forex, or should I move to futures? Depends what you're trading, isn't it? If you're going to be trading Forex, on futures, though, you're trading the same market. Of course, the conditions are slightly different. Well, quite different, but you're still trading the same price action at the end of the day, just in a different kind of format. So I wouldn't say, okay, if you're struggling in Forex and you switch to futures, your problems are solved. I don't think that's the case at all. You will see the same problems appear in futures as well, because at the end of the day, it's not your trading ability on Forex that's holding you back. Well, it is your trading ability that's holding you back. It's not the Forex itself that's holding you back. It's your trading ability. You might be suited more for futures. That could be true. I don't know how you trade, but you could be suited more for futures. So that could be true. And you might find it easy on futures, potentially. But you want to get to the core root of the problem, which is your trading. So yeah, potentially futures might be better equipped for you, especially if you're very intraday. I would say the format of futures makes sense. Even if you're going to trade like indices as well, that makes sense. But I would say get to the root of the problem, whether it's futures, CFDs, whatever. It needs to be your trading approach that's refined. Just switching to a different type of trading, I don't think will solve your problems. Might make things slightly easier, but I would think the same problems will still emerge. So my advice is get to the root of the problem. What's the issue? Is it is it the trades you're placing? Is it the way you're managing the trades? Is your approach to the markets? Understand that in detail, and that provides you a lot more information than just switching to a different type of trading. So yeah, I mean, again, like I said, futures could be a better situation for you, but I don't think it will just suddenly create profitability. The approach needs to be refined first. So yeah, we're going through the USD, we're going through the yen. I want to talk about some of the indices and the crypto market. So indices still looking relatively healthy. I would say we are slowing down, which is a little bit of a red flag here for the S&P. We're not looking as healthy as we were, for most of 2025. You can see prices really struggling to beat these new highs now, which again still shows that the market is bullish, but we're finding it increasingly more difficult to sustain this bullish narrative. So it's a sign that S&P is starting to struggle. And eventually, if this struggle does continue and build up, you can probably expect to see a bit of a relief lower. Now, again, when is that going to happen? No idea. And there's still probably multiple opportunities to take this higher before that crash does eventually unfold. So it's a situation where you're not looking for exponential returns right now for the S&P, especially if you're a bit more of a swing trader. You're looking to try and buy some dips, swing it back to highs, maybe trail some stops, see how far you can take it. And if price does start to fatigue, you can scale out your position. I think that's the best way to manage it, because If price does explode higher, well, you're still positioned to take advantage of that. But if it does eventually fail, well, then you're prepared for that as well. So both sides of the coin. If you're looking a bit more intraday, nothing's really changed here. You're still looking to buy the dips. Market's still just about making higher highs and higher lows too. You got some nice structure below us here as well. You can tap into that. That looks like a smart place for a nice opportunity within the week there. So S&P signs of slowing down. Keep that in mind, especially if you're looking for like long-term growth. If you're a bit more intraday, you're not too concerned about that. Nothing's really changed yet. S&P still struggling, but we're kind of squeezing as well. So I want to see who comes out victorious here, because we're forming higher lows, but we're also forming lower highs here. Of course, my favor would be to the buyers naturally, because we've got that natural drift for the Nasdaq. But I would want to see some evidence of us taking out some highs and then maintaining the higher lows, and that becomes a nice trade back to the high. So Nasdaq, we're coming to some resistance. Probably not the best time to stick a long position on, because of course we could still have that reaction and push lower. But should we start taking out some highs, well, that shows us that the buyers are doing a better job than the sellers. And then our next big target will then be the all-time high on our left there. So in terms of upside potential, I think Nasdaq is the better one to focus on. Of course, it hasn't made new highs in a while. S&P has, and same with US 30 as well, looking pretty healthy, probably the healthiest out of the major US indices. This one just made some new highs recently, so again, I don't see much opportunity on US 30. Nasdaq severely lagging behind, therefore there's opportunity here to catch up with the rest. I always like the opportunity where you got correlated markets and then one of those markets is not performing quite well, because you would expect naturally that one to not perform well to eventually catch up with the others, as long as the overall narrative stays the same. So Nasdaq is some nice upside opportunity. S&P looks pretty good, but more kind of day trading in and out situation. If you're looking for a swing, I think Nasdaq can provide some nice trades. And in terms of BTC and some of the cryptocurrencies, I think they're all positioned pretty well for a bit of a bull run. Whether this will start a complete new bull cycle or not, I don't know. Just because BTC just looks really fatigued right now. You can see we've had this massive bull cycle here. And then we had a consolidation, another bull cycle, but it wasn't as aggressive as the last one. And then it consolidates, has a deep pullback. And then we had another bullish move, but again, it's less progressive than the one before it, which was less progressive than the one before that. And then in this occasion, we just about made new highs. We consolidated above this high here, but it was only temporarily before price had a big push down. So each bullish swing has resulted in less upside. So that tells you that the market is fatiguing as a whole. Yes, we're still in a bullish trend and bull cycle overall. But let's say if we do start to expand higher, I'm expecting sort of this to happen. Maybe we just scrape highs again, and then we kind of have a big rollover. Maybe already in place, but we'll see. So BTC long-term, not looking healthy. We do have structure on our left, which is still providing adequate support and still very much could give us another move higher. So currently for 2026, I think we're positioned quite well for another bounce for BTC, at least back to this range here. But like I said, sustained highs, continuous higher highs and higher lows. It's going to take a lot of people buying into BTC, like a new narrative, maybe some global crisis where people lose even more confidence in usual assets and currencies, and that causes BTC to have a big surge. So it's going to need that kind of volatility to expand high and really push. If not, this looks like it's just going to probably scrape highs and then roll over. Ethereum actually looks not bad. It's still quite flat, but we're still pretty consistent with our higher lows here. So I do think, again, Ethereum is positioned for another swing back to highs. But again, do we have enough to break through, or is it still going to continue moving sideways? we'll see. But again, we don't have to be so concerned with that. You know, if we're looking to trade the market, well, what's the next best trade? Well, we're coming back into this area here. If this holds, I would say we've got a pretty good chance of seeing a push back towards resistance, back towards supply. So this becomes a nice tradable opportunity. Of course, if we expand through highs or not, that's not really our concern just yet. Of course, if you're investing, that's different. But trading, not so much. If you can profit from this move here, I think that's a great move to look into. Same with BTC as well. Long term, not too sure, but if we can profit on this move from that zone to that zone, well, that looks like a good trade as well. So there's still opportunity there, just long term. I'm not entirely convinced. LFTJ, what's up, my man? Welcome to the stream. CAD yen, we can take a look. I'm seeing a retest of 113.446 sell to support. Okay, we take a look as well. Mr. Nub, do you use SMT divergence as one of your confidences? And I use SMT divergence with Forex market. I don't use SMT divergence, my man. I don't use that as a confluence. Yeah. So I'm not the best person to ask on that. Yeah, I mainly focus on just kind of how the market is moving in terms of its balance, looking at where the buyers are performing, where sellers are performing, who's losing out, who can't sustain price, where does price has to go to find new balance. Is the trend healthy, structure breaking? Those are the questions I'm looking to ask myself, and that's kind of how I derive my bias. Yeah, SMT divergence, I don't look at that. I don't even know what that is, to be honest. So yeah, again, there's a million ways to trade the market as well. You know, there's a million ways. The most important thing is finding a way and then getting good at that way. So yeah, whatever that is, get good at it. That's my only advice. But me myself, no, I don't look at that. We can take a look at CAD yen, LFTJ. You mentioned a breaking retest of 113. We can have a little look at that. 113.446 sell to support. Okay, where is that? 113.446. That's about there. Which support are you talking about? Are you talking about back to where the prior low is? So here, 113.14, around there. You're talking about like a short-term intraday move back into swing lows, or are you talking about like a bigger move back into support on like the 4-hour chart, 112.3? Let me know. Yeah, CAD yen, I'm not really concerned about shorts, to be honest. Trend is still looking pretty healthy to me. I know we're breaking through some structure here, and we're seeing a bit of a relief of that, but we're starting to pull back into some bullish areas. So I would be quite concerned looking to short CAD yen over a meaningful distance. If it's a bit more short term, I understand it, but if it's like a big push here, there's a lot of areas where price can find support, buyers can come into play, and basically just form a higher low against us. So I'm not really concerned with the shorts for CAD yen because momentum, structure, everything is still extremely well bullish. Of course, doesn't mean we can't see downside. It just means it's going to be harder to see it. So because of that, I'll be very careful shorting CAD yen. I mean, I do like the aspect that we had this consolidation, markets made a meaningful break to the downside. But I find it difficult trading that because we have just pushed straight back into bullish value. If we broke out this consolidation, but we didn't have any strong levels of bullish support demand until like down here, and that's something else, because then I can trade that distance towards that area. But because we've already hit some bullish value, which could potentially give us the continuation of the trend, I would just be a bit careful with the shorts there. So if you're looking for like a very short-term move, I can understand that because you'll be in and out. But if you're looking for like some real downside, you do have some obstacles to deal with there. And again, doesn't mean we can't see the move. It's just you've got a lot of bullish participation to overcome. And in a strong uptrend, it's always going to be difficult for that to actually happen. So yeah, any of the yen pairs really, I'm not really concerned about shorts. Yeah, none of the yen pairs really do motivate me to sell. Again, I do like the aspect that these trends have been going on for a while. They're quite fatigued, and if they do start to run out of steam, I do think the downside moves could be quite aggressive. I mean, if you look what happened, was it last year? No, well, the year before actually, 2024. We had the kind of same situation, uptrend continuing for a while, one last big expansive move, and we had this massive collapse. I'm not necessarily saying that that's going to happen again, but if we are going to eventually see that relief, we could probably expect to see a meaningful down move. So this could happen at some point in 2026, and I would want to be there for it, absolutely. But I'm not seeing evidence of us being in that situation yet. And that's really what I'm looking for if I do start looking to sell the yen pairs, is a meaningful move down. So yeah, I'll be a bit more patient with the yen. For the yen government wants to increase rates, so maybe we could see a strong move for the JPY. Yeah, of course. I mean, that's what's being hinted. Well, it's not hinted. It's basically being put into place actually. So, but the thing is, with the interest rate increase of the yen, it's not of major significance just yet, because the main benefit of looking to buy currencies against the yen is the carry trade, which of course the interest rate differential is going to favor a lot of these currencies: euro, Aussie, pound, etc. Because of course they got high interest rates, so it makes sense you're going to have that positive carry trade. And even if the rates do increase for the yen, the carry trade is still there, but of course just less meaningful. So yes, you're definitely right that increasing the rates does reduce the profitability of these up moves. And it will get to a point where if the yen, if the Bank of Japan keep increasing it, and of course if other currencies are decreasing their rates too, well, then it will get to a point where we come to a crossroad where there actually isn't a positive carry, and that could be the breaking of the trend. But it doesn't necessarily need to get to equilibrium. It could just be a very small positive carry, and that's enough to put off the trend there, to be honest. But it's something to watch out as we progress through 2026, because apparently that's the narrative for the yen. But of course, price is the most important thing. Price is the most important thing, because Bank of Japan could be saying this, another bank could be saying this, but what is actually being represented by the markets? Is the markets agreeing to that? Not just yet. Of course, that can change, but the markets still look pretty bullish. So I definitely agree with that. Keep an eye, see how that progresses for 2026. If price starts to show us that these trends are dying and we're pointing in a direction of yen strength, then that's the time you start striking for some big swing trades lower. Because everyone's going to be over leveraged to the upside for the yen pairs. These bull trends have been going on for like 2-3 years now. So if they do start to see some major downside, you could see some price action that mimics that in 2024. LFTJ have actually zoomed out and realized KJN's respect the trend line in a bit, invalidate that idea. Okay, fair enough. Yeah, I think the trend is just a little bit too strong. Like I said, if CAD Yen had a situation where it didn't have support just below it, then I would like that narrative, because we've had a big push. Markets finding it difficult to sustain price. A bigger pullback makes sense, but because we just got structure below, and I think you're right with that trend line there as well, kind of coming into play. It's just that it's a difficult battle to take that sell. It's not that the sell can't work out. It's just the probabilities aren't particularly high. And that's, of course, all we have as traders, is stacking information in our favor and then taking a position once the information is of good quality. Anything sub-threshold below par is none of our business, really. We shouldn't really be looking to entertain those ideas. But yeah, for me, myself, I've only got these pairs I'm watching over, probably for most of the month here. Aussie TGF, I'm looking for a big expansion higher, primarily more so into this kind of area. Again, I'm not having so concrete targets for the trade. I'll monitor as it goes along. This is really where I'm looking to target. And then Euro Aussie, pretty much the exact opposite. Same trade, just opposite direction. I'm looking to see if we can get a push down into here as well. So market's showing a lot of instability here, consistent lower highs, failing to continue the trend, range expanding. I do expect us to drift lower. This is where we had our last meaningful range in the market. So I expect us to push there. Likewise with Aussie CHF as well. So some counter trend positions. And also we started off the new quarter as well. Typically, new quarterly cycles, new monthly cycles do incentivize new kind of trends, new moves in the market as well. Sometimes we can have a perfectly nice bearish trend, a quarter comes into play, that trend maybe moves sideways or even trends in the opposite direction. Yeah, money flows changing, etc. So potentially we could be seeing a new kind of regime, new kind of context now for some of these pairs, particularly Aussie as well. And I'm looking for that expansive move higher. And then, of course, Pound Aussie is another pair which I like, but it's the same situation as Euro Aussie. So I'm not going to take Pound Aussie because it's just a worse Euro Aussie trade, if that makes sense. Euro Aussie ticks a lot of boxes. Pound Aussie ticks a lot of boxes, but Euro does it better. And Euro CAD, I also like this one as well. Nice uptrend. Again, becoming a bit fatigued. I do think there's room to the downside for this one as well. I'm just waiting for a bit more information before I do click the trigger, because we are quite flat here, which again isn't necessarily entirely bearish or entirely bullish. You know, this could just be a larger flag pattern for us to continue higher. I kind of want to see us fail to the upside more spectacularly, maybe have like another big surge to the upside and then we fail. That would give me the confidence to say that, okay, yeah, we've had multiple attempts to try and continue. Trend is looking very fatigued. We're still breaking lows consecutively. Yeah, I do expect us to expand lower now. So that's kind of what I'm waiting for EuroCAD before I jump into a position. But it's definitely something I am watching quite a lot, and especially because of where we're trading. If I go to the weekly chart, actually not even the weekly, if I go to the monthly chart, you can see where we're trading. You know, look at the highs we're trading at. Last time we were trading at these prices was back in 2018, and last time that happened, we had a considerable reaction lower, and now we're back at the highs again. So personally, I think there's a lot of room to the downside for EuroCAD if this uptrend gives way, and I'm just kind of being patient, not trying to strike too early, and see if I can participate in some shorts for EuroCAD. And then, yeah, that's it. And of course, Euro-Aussie, I'm currently in a position there. And that's really what my focus is going to be for most of the month. I think USD pairs, I think I'll let Jan go by and just kind of keep them on the monitoring side of things. I don't think any of them are positioning very well for a trade. Maybe New Zealand dollar if it breaks lower, but that's the only one that is showing some signs of a decent trade. And again, I'm not talking so much intraday. I'm talking mostly about swing here. Euro USD, again, kind of in a bit of a range, stuck between resistance, support. Dollar CHF, very flat here. Aussie dollar, very kind of choppy uptrend. Do I want to follow that? No. Pound USD in a bit of a range there as well. Dollar CAD had a nice move lower, but it's starting to break sharp to the upside, which I'm not the biggest fan of. So dollar CAD, I'm not looking to take any positions. Dollar yen, it's been a nice trend, but we're starting to push back into major resistance here. So ideally, if I want to be trading this, I should already be in the trade, not getting in now. I've already missed the bulk of the move and we're about to approach major resistance. So the timing's all off for dollar yen if I'm going to get involved now. And of course, if you look at gold and silver, yeah, they're kind of runaway trains, especially silver. Gold, I'm keeping an eye on because I did say I was looking to see what we did on the retest of this structure here. We did dip below, but now we're back above. Altogether, it's just a sign that gold is starting to tire. The trend is still good. We're still looking healthy. It's just tiring because we're seeing more prominent bearish moves now, and we're seeing them happen closer together. So it's not like back over here where we had, you know, this bearish move and then we had this big bull cycle before bearish move that happened a bit more consistently now. So The market is starting to tire, but doesn't mean short. The market is still bullish. We can still see it very much another wave to the upside as well. So I'm being patient with gold. There might be something on the retest here. If we can stay above, that could be something to look into, especially like a 4-hour chart. Come back, respect structure, and then you've got a pretty clear target, at least back to this high, but really you'd be expecting a push back to the all-time high. So that could be something to watch on gold. But other than that, yeah, I do think the market's a little bit slow. I think patience is key. Knowing exactly what you're looking for is key as well. We have seen some moves here and there. CAD was quite weak, and then Aussie CAD had a pretty big move higher. Pound CAD too. New Zealand CAD had that a little bit as well. Pound NZD and Euro NZD are very kind of sloppy, bullish trends, but they look like they're fatiguing. There could be some real downside in 2026 for these guys. I'm definitely eyeing that up as we go along, but I don't see any opportunities at least until next month. And the CHF pairs, they've been super bearish, but is it time for a bit of a correction? Maybe. Of course, I'm buying one of them, but the others don't look as promising. Maybe pound CHF looks pretty good, actually. I like the fact it's holding onto that low. So, yeah, I mean, that's kind of where I'm at with the markets at the moment. Again, just focus on quality over quantity, making sure that my biggest focus is just taking the best opportunities, looking where higher time frames are showing clear direction, clear narrative, clear bias, and then just trading those opportunities and just being relentless and ruthless with any opportunity where I'm not seeing clear bias or clear narrative. That's going to be my main focus for the year, making sure that I'm holding back when I need to. And of course, when the opportunity is there, I need to make sure I'm there to take it as well. LFTJ gold is like the Chinese train. I always miss the trip. You wake up, it's already at the station. Yeah, I agree. I think silver's even Chinese train times 10, bro. Silver's on another planet in terms of you wake up and it's gone. But yeah, absolutely, you're right. We had that aggressive drop there last week, was it? Price was a little bit uncertain. We're back above the level and gold's already looking bullish already. So yeah, but of course, patience is absolute key. The worst thing to do is chase it. If you miss the train, you miss the train. If you chase it, now you're in a different situation completely. You're on the back foot. You always want to make sure that you get on the right stop and you get off on the right stop as well. Getting on the wrong stop is worse than just not doing anything at all, really. But as you said, patience is key. But anyway, guys, we have reached the end of the stream. I hope each and every one of you has enjoyed it, found it useful, learned something potentially. If that's the case, drop a like. It does really help out. Subscribe to the channel if you're new as well and you're enjoying the content. I will be live again next week, Wednesday, but I will be live actually tomorrow on Nick's channel too. So if you want to see any updates, make sure you check out his channel. I'll be live with him on his channel tomorrow afternoon. But yeah, guys, I really appreciate you tuning in. Yeah, more videos coming your way as well. If you do have any recommendations, technical videos, mindset videos, anything related to trading, really, just drop it in the chat. I pretty much read all comments. So if you have any kind of type of videos you want to see from the channel, let us know, and I'll be sure to add it to the list. Trader Nick. If you just search his name on YouTube, it's difficult to miss him. He's got quite a big channel. But Trader Nick, I do stream with him. I've been streaming him for the past few years now, actually. But yeah, I will be live on his channel tomorrow. So yeah, just Trader Nick. You can't miss him. But yeah, if not, I'll be live again next Wednesday for you guys as well. And of course, other videos coming your way too. But guys, really appreciate you tuning in. Have a great Wednesday. Stay safe in the market. Stay disciplined. Stay patient. And let's have a good 2026. All right, guys, take care. Have a good one. See you in the next stream.